Welcome, and thank you for joining today's Community Project Funding Grants webinar series. Before we begin, please ensure you've opened the WebEx chat panel using the associated icon in the bottom right corner of your screen. Please note that all audio connections are muted at this time. As a reminder, the conference is being recorded. If you require technical assistance, please send a chat to the event producer. With that, I'll turn the conference over to Eric Chatham, consultant for Civitas LLC. Please go ahead.
Hi, welcome, ladies and gentlemen. Thank you for joining us on today's session for Community Project Funding Grants webinar series. Today's session titled A Practical Guide for Cost and Addressing Indirect Cost Rates. Before we begin on today's topic, a few reminders and information for our 2022 and 2023 grantees. We have some upcoming trainings and additional webinar series specifically for these grantees. Starting with the 2022 grantees, there will be a cohort for grantees that have not submitted any grant materials yet. Registration emails have already been sent to the point of contact for each grantee, and there will be 4 live sessions as well as office hours with HUD and technical assistance providers. Sessions will begin next month starting on October 2nd. For FY23 grantees, there's a similar cohort for grantees that have not yet submitted any grant materials to HUD. Likewise, registration emails will be sent to the point of contact for each grantee. There will be 4 live sessions and office hours with HUD staff and TA providers, and those cohorts and sessions will begin in January of 2024. A reminder for all CPF grantees, HUD now has on the HUD Exchange website, you see the link on the bottom right of your screen, there's a particular page dedicated for CPF grantees. Also on the HUD Exchange, you can now use the Ask a Question help desk for CPF grantees. You can also ask through that portal questions related to the environmental review as well as the DRGR system. An additional reminder, we'll have continuing this CPF webinar series, we have additional topics later this year covering Section 3 requirements, fraud, waste, and abuse, reporting requirements, and grant closeout requirements and expectations. Registration and details on those sessions will be provided to each grantee. A few tech tips for today. Reminder that the full recording of today's webinar will be made available on the HUD Exchange, specifically on that CPF website page under past trainings and general resources. There'll be a link right here to that page. You'll be notified via email when today's webinar has been posted to the CPF website. The slide deck and transcript of the presentation will be posted to the website. In addition, we encourage you, if you have not already, to sign up through the HUD Exchange, EDI, and CPF Community Project Funding listserv. And here's a link to sign up for that listserv and check the EDI CPF Community Project Funding Grants box. And I'll show you a screenshot of that momentarily, but really encourage everybody to get registered for these events and join the listserv so that you stay up to date on all new publications and guidance. As previously mentioned, we will not be opening up the chat during this presentation nor taking questions live. So we encourage you to use the Ask a Question should you have follow-up questions related to these topics. More extensive requests for technical assistance can be submitted through the help desk as well. And you can do that on the HUD Exchange, the bottom link there on item number 7. Quick screenshot for orientation purposes. Here's a screenshot of the HUD Exchange, and in the middle of your screen is what the CPF page looks like. Of course, it's got all of your grant guides, and it's got prior trainings that are linked there. DRGR system information, heroes for your environmental review, SAM.gov information, policy guidance, FAQs as they are continuing to expand, and any additional guidance or regulations that may be updated or posted here. Where we left off here, I was just pointing out the additional resources available for you on the HUD Exchange. And here is a link to the HUD Exchange Ask a Question. You can see that in the top menu bar through the program support and drop down to the Ask a Question. Or if you need more detailed assistance, you can see that and request in-depth assistance on the right of that screenshot. On the screen you see now through the HUD Exchange, just the last item here on the HUD Exchange, really encourage everyone to join the mailing list, and you can subscribe through the HUD Exchange to a variety of mailing lists. You can see in the bottom left where that blue arrow, where the EDI, CPF, listserv checkboxes. Thank you. Next slide. So for today's specific training objectives, we will look to review cost rate information for community project funding grants. Specifically in your grant agreements on Appendix 3, we're going to look at grantees' indirect cost rate information. We'll do an overview of the Office of Management and Budget's uniform guidance for cost and cost controls. We'll outline key concepts for understanding cost classification and understanding the difference between direct cost and indirect cost. We'll discuss how to determine and document your indirect cost using one of the available indirect cost rate methodologies. And we'll learn how to determine when the correct methodology or formula has been used for those indirect costs. And finally, at the conclusion, we'll highlight the areas in your grant agreements and your grant guides prior to submitting your grant packages where this information should be included. Next slide. So calling your attention in your grant guides, we'll start first with the fiscal year 23 grant guide. And these are simply screenshots on the right-hand side of the screen from page 7 and pages 19 and 20, specifically identifying the information required in the special instructions for grantees when you elect to use an indirect cost rate. Page 7 requires that you provide detailed project narrative and line item budget, which includes, if you so elect, the indirect cost rate, again, as described here in this section of the grant guide. Next slide, please. In the appendix on page 41 of the grant guide, still focusing on the fiscal 23 grantees, you'll see attachment 1 with your grant agreement submission checklist, and highlighted here in the red circle is the indirect cost rate questionnaire. We'll review this before the close of our presentation, but you must elect to either charge an indirect cost rate or not. And should you elect to charge an indirect cost rate, you have to identify what rate and who approved that agency, the federal agency that approved the indirect cost rate, and the basis for that rate. And we'll dive into the details of each of these questions throughout the presentation. Next slide, please. So similar sections were covered as well in the FY 2022 grant guide. They're on page 13 and pages 25 and 26. Similar information was required, just the formatting of these two guides has this information on different pages. So again, fiscal 22, you'll see this information about the indirect cost rates and the description on page 13, and then the details shown on your screenshot from pages 25 and 26 of your grant guide. Next slide, please. Then the grant agreement submission checklist, again for fiscal 22, can be found on page 18. That same questionnaire related to the indirect cost rate is found at the bottom of that page. Again, page 18 in the grant agreement submission checklist. We'll show you samples of how this should be completed towards the end of the presentation based on your options for the indirect cost selection, yes or no. Next slide, please. Additional or supplemental information related to indirect costs can be found on the CPF website. We're showing you where this PDF is linked. And you can see a screen grab on the right-hand side for general principles for all cost, classifying cost, and then determining indirect cost rates. So it's a quick guide, if you will, on the topics to be covered throughout this webinar. Next slide. Here's a reminder of where each of the cohorts can identify or locate the grantee award package completion checklist, again from the screenshot. So we're showing you 2022 here and a look at the completion checklist form on the right side. Next slide, please. Okay, so let's go through the particulars of the grant agreements, and we'll start with the fiscal 22 and 23 grant agreements on page 3. We're highlighting here the clause F, and I'll summarize here, but the grantee must use the grant funds only for cost, including indirect costs, that meet all the applicable requirements in 2 CFR 200 and including appendices. And as mentioned previously, the grantee's indirect cost rate information, should you choose to elect indirect cost rate, must be provided in Appendix 3 of the grant agreement. Unless the grantee is an institution of higher education, the grantee must immediately notify HUD upon any change to the grantee's indirect cost rate during the period of performance. So keep that in mind should your rate change. If you're an institution of higher education and have a negotiated rate, that would be effective on the date of the grant agreement is signed by HUD, and the grantee then at that point may only use the rate for its indirect cost during a period of performance. So I encourage everyone to access their grant agreements and review on page 3, clause F, this section. And the webinar today will go over all of the cost principles and applicable requirements in 2 CFR 200, again, as it relates to cost. Next slide. So here's the screen grab of Appendix 3, the indirect cost rate. This is the blank form. We will go through all of this and show you samples of filled out. But you must complete this indirect cost rate form, the first 2 boxes at the top. The grantee will not use an indirect cost rate to charge its indirect cost to the grant. If you elect that box, then you need not fill out any of the information further down. If you select the second box, the grantee will use the indirect cost rate or rates identified in the table below to charge its indirect cost to the grant. And then you will fill out your agency or different departments, the major functions as it relates to grant management, the indirect cost rate, and the cost basis. And we will go through each of the cost basis momentarily. Details about those cost basis, which we'll be covering, including the modified total direct cost and the de minimis rates, and the simplified allocation methodology for total direct cost. All of this we are going to cover today, but this is where you can see reference in your grant agreements to this material. Next slide. So a little bit of background information on where this guidance and these regulations come from. The White House Office of Management and Budget, often only referred to as OMB, has published the Uniform Administrative Requirements, Cost Principles, and Audit Requirements for Federal Awards. commonly known as uniform guidance. This is the authoritative set of rules and regulations governing all federal awards and provides standards for establishing and documenting both direct and establishing indirect cost rates. Next slide. Key components of the Uniform Guidance 2 CFR 200 Subpart E cost principles. We have provided links to 2 CFR 200. You can, of course, certainly Google each of these sections, but I encourage you and certainly your financial management team, your accounting team, to be very familiar with all of these principles. We won't go through each one of these in total detail, but we'll hit some highlights from each section. So we're going to look at the composition of cost, what are direct and indirect costs, the factors affecting the allowability of cost to be charged to federal grants, reasonable cost, allocable cost, applicable credits, the classification of cost, again, direct and indirect cost, including facilities and administration. We've provided a particular link for the indirect cost, given that that's a key topic for our webinar today. Next slide. So just real high level here, the composition of cost. You must first determine all of your allowable direct cost. We'll define direct cost momentarily, plus all of your allocable indirect cost, those indirect costs that can be allocated to the federal grant, minus any credits that have been provided by any of your vendors, perhaps, and that equals the total cost associated with your grant. I know this is very simplified, but we're going to break this down momentarily. Next slide, please. So diving into further details here of the cost and allowable cost versus unallowable cost in 2 CFR 200. Left-hand side shows the requirements to confirm a particular cost is allowable to be charged against your federal award. And on the right-hand side is a list of costs that are always not allowable or unallowable costs. So that can be found, the allowable costs can be found in 200-403, items A through G, and the unallowable cost range from 200.421 through 200.470. And so to be allowable, costs must be reasonable and necessary. We'll review this momentarily. They must conform to any limitations or exclusions particular to the grant award itself. The cost must be consistent with the organization's policies and procedures. And to that effect, the cost must be accorded consistent treatment. And so you must treat each of your types of cost that your organization incurs consistently for both the federal grant and non-federal grants. Your organization has to have one policy for how costs are allocated, and the federal funds must be treated in that same standardized manner. All of your charges against the federal grant award must be determined to be in accordance with generally accepted accounting principles. So your documentation and your accounting procedures for this federal grant must be in compliance with GAAP. Cannot be included as match or cost share. And of course, your cost must be adequately documented. The unallowable cost, I want to point out a couple that may be applicable here and a little less obvious than others. Advertising and public relations, 200.421 is not allowable. So be mindful, some of your programs may include some advertising or promotional events for your new facilities or your new programs. Be very careful that you're reviewing this section for as it relates to any advertising. Entertainment cost, be very careful with entertainment cost. If you're hosting events, kickoff events, ribbon cutting events, be very careful with entertainment cost. Fundraising and investment management cost, we're just pointing out that fundraising activities are not eligible here with federal awards. So again, be mindful as your project kicks off that you're not utilizing these funds in relation to fundraising events. These funds cannot also, at the bottom, 204.51, cannot cover losses on other awards or contracts. And then, of course, cannot pay taxes with these federal funds. Next slide, please. So as it relates to cost classification, here are some key concepts of the cost eligibility. This is covered in 2 CFR 200, section 403. I was showing you items A through G on the previous slide. So first, the cost must be necessary, meaning that the federal award is going to be used to fill a gap in your project budget that can't be filled by another funding source. So you need this funding for your facility improvement, for example. You've got 50% of the funds from somewhere else. You've documented that you have this need. Our construction budget needs additional funding. We haven't exhausted all other opportunities or options for funding, and then therefore, or but for these funds filling this funding gap, we would not be able to proceed. So you want to document that these funds, the cost or the expense is necessary, and it cannot be filled by any other funding source. Really want to draw your attention to item number 2, cost reasonableness. The definition is that costs do not exceed what another prudent person or organization would incur under similar circumstances, as demonstrated by the market price for comparable items. And that's really the key phrase there, as demonstrated. So as you're going through procurement and you're selecting your vendors and your contractors for your projects, procurement in and of itself just establishes qualified responsive bidders, and presumably you're selecting the lowest responsive bidder. That being said, you also have to confirm and document that the cost you've identified or the fee that has been identified through procurement is a reasonable expense compared to what's in the marketplace. So typically what we need to do is call around to other similar jurisdictions or similar grantees that have had similar projects and see what the market rate is or the going rate is for this type of project. Local governments often refer to this as the public body estimate. So we kind of estimate what a reasonable expense or reasonable cost estimate should be. And then we do procurement and we confirm that our responding contractors are providing a reasonable quote based on our expectations. So cost reasonableness needs to be documented then in how you establish that the expenses you're incurring with your contractors and vendors are reasonable fees. You must identify item 3, that costs are allowable under 2 CFR 200, previous slide, and allocable. Costs must be clearly allocated, meaning there's a methodology for determining where to attribute cost. And this is really where your accounting and your financial management team will come into place. You need to have established policies and procedures for how your organization charges costs both to this grant and to non-federal funds and programs, and you must do so in a standardized methodology. We have a few practical tips at the bottom of several slides throughout the presentations today. And here, the grantees should prepare their budget to ensure all costs are eligible based on the above criteria. So as you're doing your line item budget for your final grant agreement, be confident that you will be able to substantiate a necessary, reasonable, allowable, and allocable. Next slide, please. So we have two main types of cost, direct versus indirect cost. We'll go into details here, but high level on the left, direct costs are those that can be identified specifically with a particular final cost objective or a particular award, project, service, or other direct activity of the organization. So you can attribute time and expenses specifically to the outcome of this federal award. On the indirect side, indirect costs are incurred by your organization for common activities or joint objectives, and therefore those expenses cannot be readily identified or attributed to just a particular final cost objective, or in this case, a particular project. Next slide, please. So there's no universal rule on classifying costs between direct or indirect. Oftentimes you'll have costs that could go either way. And so we're going to kind of work through methodologies for appropriate determination. A cost may be a direct cost with respect to some specific service or function, but on the other hand, it could be indirect with respect to the federal award or other final cost objective. It is essential that each item of cost incurred for the same purpose be treated consistently in like circumstances, either as direct or indirect, in order to avoid possible double charging of federal awards. As I've mentioned previously, you really want to make sure your organization's financial policies and procedures identify how you will allocate cost, and you must do that in a uniform, consistent manner across all of your programs and funding sources. Because of the diverse characteristics and accounting practices of the wide variety of organizations funded through these programs and other federal grants, it's not possible to specify the types of costs that may be classified as indirect costs in all situations. So we're going to give you examples and typical indirect costs, but that may not be fully exhaustive for everyone on the call today. With respect to federal awards, identification of costs should be in relation to the federal award rather than specifically the nature of the goods and services involved in determining whether the cost is a direct or indirect cost. Next slide, please. So let's dive into some details and examples of direct cost. You can see the 2 CFR citation on the top of your screen. 2 CFR 200.413 dives into the details of direct cost. Again, these are costs that can be identified specifically with a particular final cost objective, identified or attributed to a specific program. So an example, and we'll use this organization a couple times today. The Safe Home organization will use CPF funds to provide housing options for seniors. The case manager's costs can be direct cost if they only work on the CPF grant. And how you determine that they've only worked on the CPF grant, your wages are considered direct cost if you can meet these criteria here. Number one, confirm that the rates of pay are reasonable in accordance with the work performed. Second bullet, verify expenses are based on actual hours worked on this grant. So that's not to say that the case manager can only work on CPF. That's all he or she can do for their full-time work. But in the hours that are being billed to the CPF grant, that's all they worked on. So again, verifying those expenses are based on actual hours worked on the CPF grant program, and that needs to be evidenced by attendance reports or timesheets, and you must then ensure that those costs are supported by detailed general ledger and payroll accounts. So again, direct cost here for staff wages, you're confirming with timesheets and payroll reports to confirm effectively the hourly rate that can be billed to the CPF grant. Next slide, please. As it relates to employment or wages for your staff, direct costs can include fringe benefits, and you need to verify that the costs from salaries are reported by the type of benefit individually. So, for example, health insurance plans or medical leave, etc., or the benefit rate is specified specifically. Other examples of direct costs are equipment, supplies, and contracts. If those are some of your costs, and we know it is for many of the grantees on the call today, you need to maintain files to verify first your procurement requirements are met and the relevance to the program, and that the equipment or supplies and contracts are directly allocable to the CPF grant. Travel cost can also be direct cost, and if that's the case, you need documentation to include the purpose of the trip and how it aligns with the program needs, and then of course include receipts for things like rental cars, airfare, hotel, per diem for meals and incidentals, etc. Next slide, please. So now let's give some examples of indirect cost. So depreciation on buildings and equipment. Those are hard to attribute to just one particular program, especially if an organization has many programs and different funding sources underway in the same building. Cost of operating and maintaining those same facilities are hard to attribute specifically to one cost center or another. And then general administrative expenses. So we talked about specific staff working directly on your CPF grant, but more generalized, like the executive director or the accounting staff and general personnel administrative duties are not so easily identified. Remember, if I'm going to bill an hour of my time to CPF, then really all I'm working on in that hour is the CPF grant. So a lot of times you have administrative or executive staff that are working on CPF, but they're also working on multiple other things at the same time. And those would be more likely be appropriate for indirect cost. Next slide, please. So here again is the citation now for the classification for indirect costs, 200.414. And those are the cost or the expenses of doing business that are not so easily identifiable to a particular grant, contract, project function, or activity. But of course, they're necessary to operation of the organization and to conduct the activities under this grant program. So another example here of the indirect cost by that same organization, Safe Housing Organization CEO will work on the CPF project in conjunction with his or her regular duties. So these costs generally include their salary, administrative. And so to be an indirect, it can be a percentage of their salary as determined by a formula. We're going to talk about those formula options. Additional indirect costs could include, as we mentioned, facility operation and maintenance. And so therefore a percentage of the salary for your maintenance team as determined by a formula. And depreciation of those facilities, again, determined as a percentage of the overall cost, determined by a formula. And so we'll talk about those formulas. The practical tip here, grantees should ensure when they submit their grant packages that they contain a methodology for determining types of cost. And if the grantee intends to bill for indirect cost, there should be a dedicated line item in the budget. Consistency is key. So want to really cover these indirect cost options. And so make sure that when you, for those of you that have not already executed and submitted your grant agreement package, that you take this into consideration and perhaps include this in your budget for line item details. We'll go through all of this again in more detail momentarily. Next slide, please. So for your indirect cost, there are three methodologies or formulas for calculating those indirect cost rates. So number one is the 10% de minimis rate, and that's at 2 CFR 200.68. And I'll go through how to calculate the de minimis rate momentarily. Or you could already have a federally negotiated indirect cost rate agreement, NICRA. I'll show you some examples of those. Some of our local governments or larger nonprofits may already have those. If that's the case, you are allowed to use existing federally approved indirect cost rates. The third option would then be to establish a new federally approved indirect cost rate. As I'll cover shortly, that can be very time consuming and may not be appropriate or feasible for CPF grantees at this time, but I'm going to share that information with you. Nonetheless, that might be something you consider for future federal grants. So in reality, and most feasible for our current two cohorts of CPF grants, you're most likely either taking the 10% de minimis rate, or you already have an approved federally negotiated indirect cost rate agreement in place. Next slide, please. So item one, the de minimis rate, which is what is, again, would be most feasible for our smaller nonprofits that may not already have an indirect cost rate approved. So CPF grantees can select this option because you don't have that rate approved by a federal agency. And it's not needed for agencies receiving less than 35 million per year in direct costs. So if you don't have 35 million in federal funds, which probably is most of us on the call, then you're allowed to use this de minimis rate and don't necessarily have to have the approved federal rate. So the de minimis rate is calculated by taking 10% of modified total direct cost, MTDC. So of course, the next logical question is, what is modified total direct cost? Cover that on the next slide, please. Next slide, please. So modified total direct cost means your grant award minus any excluded direct cost. So the MTDC means that includes all direct salaries and wages with the applicable fringe benefits, materials and supplies, services, travels, and even subawards and subcontracts up to this first 25,000 of each sub-award. And I know some of our CPF grantees are national firms or organizations that have and will have many sub-awards to their affiliates throughout. So that might be applicable there. Be careful in your calculation. But what it excludes, the modified total direct cost, what it excludes here in the middle of the paragraph, I want to call your attention here. Number one is equipment and capital expenditures. Those are two items that are going to be particularly relevant for our CPF grantees, as well as charges for patient care, rental costs, tuition remission, scholarships, fellowships, and participant support costs, and the I-2 portion of each sub-award and subcontract in excess of 25,000. So really, I think the two key items here I want to call to your attention, that the modified total direct cost, if you're going to go with this, excludes equipment and capital expenditures, as well as anything above 25,000 for sub-awards. I know those will be particularly relevant for many of you. So an example at the bottom of your screen, and I'll show you several more formulas on subsequent slides. But if a sponsor requires the 10% modified total direct cost to establish your indirect cost rate, you exclude the capital equipment, and you have budgeted $10,000 for equipment, the direct cost base then would be calculated as follows. So you have $100,000 in total direct cost, minus the $10,000 in equipment that is excluded. So now your modified total direct cost rate base is $90,000. Next slide, please. So here's just a quick example of this. So here's our grant award over 4 quarters, we've been approved for $350,000, and we want to use that de minimis indirect cost rate of 10%. And so if you looked at the follow me with each of these columns, in period 1, you have $38,872 in total direct cost, and they're broken down with salaries and fringe benefits as well as contract. And notice that big $15,000 in equipment, and then $1,000 for supplies and $4,000 for subawards. So our rate then, we're calculating the modified total direct cost is the total cost in that column minus the equipment. And so the actual cost then are the $23,872, and therefore 10% would be the indirect cost. The de minimis rate would be $2,387. So then our total actual amount for that period 1 includes all of those direct costs as well as the equipment, plus 10% for de minimis, and we calculate the basis for the de minimis by excluding the equipment cost. Grand total eligible cost for that quarter or period 1 would be $41,259. You see again in period 2 that we have a $3,000 in equipment, and so we're deducting that from the calculation to establish our de minimis rate. As we move forward in period 3 and 4, that equipment has been purchased. We're moving more towards salaries and contractual work, and so we see that our costs are there are no excluded costs as we establish our basis for the indirect or de minimis rate. So there are some calculations again. Period 1 and 2, got to be mindful to deduct the equipment, and then it's 10% of what the remaining. Period 3 and 4, we had no equipment, so the full cost of direct costs are eligible for the 10% de minimis rate. Next slide, please. So if you have an existing federally approved indirect cost rate, and some large nonprofit organizations and many government entities will have an existing rate approved. If that's the case, the grantee may use that rate and distribution base specified in their indirect cost rate proposal. An organization can choose to calculate its negotiated indirect cost rate in one of 2 ways: based on total direct labor or based on total direct salaries. And so again, this is for those of you that already have an indirect rate approved. You've got 2 ways of calculating. I'm going to show you how those break down. So total direct labor or total direct salaries. Next slide, please. So your left-hand side shows you a calculation. Option 1, the total labor approach. If you notice, the total direct labor is 10%, and it includes salary and fringe. That's the key difference here, is the total labor includes on that left-hand side $33,750 in fringe. Remember from previous slide, if you're going to include fringe benefits, and that's allowable, you have to be able to document the specific cost associated with that fringe and document for the particular employees. So be mindful there that you have the appropriate source documentation. Right-hand side then, maybe this is a little simpler to calculate, the direct salaries approach. Again, the key is it excludes fringe benefits in the total to establish your basis for your indirect cost rate. And so you see the little minor difference there in your indirect cost rates and therefore your total budget. Next slide, please. Here are just a few screenshots. There's 3 screenshots of samples of previously approved indirect cost rates. Here on the left-hand side is an example of Health and Human Services. As a side note, that's who would approve any new rates should you elect to negotiate with the federal government to establish a new rate, you'll do that through HHS. But here in the middle is a sample of how this looks from Department of Labor, and on the right, the Department of Interior. And so you see the different types of rates. They're basically the breakdown of the rates have this very similar table. The type of rate, the effective period, the rate itself, and what it is applicable to, what different grants or programs it's applicable to. And you see in these examples, it appears that they're applicable to all programs. Remember, you have to have that consistency of charges of your direct and indirect costs consistent with all programs. Next slide, please. So if you would like and need a federally approved indirect cost rate, there are just a few entities that might fall into the requirement to have one, and these are only governments with direct annual federal income exceeding $35 million. You're required to have one. I think there's very few, if any, CPF grants or grantees where this award will kick them over that requirement. But if you are that organization that's required to have one, or you're a grantee that might want to establish one for future projects, you'll do that through Health and Human Services. Or you could, if you're required to have this rate, I suppose at the end, you could just establish or elect not to charge any indirect cost at all if you're one of those local governments that needs to establish the indirect rate. Next slide, please. So now let's go back to those grant agreements that we were looking at. You see that Appendix 3 screen grab on the left-hand side. Reminder, you have to select one of the two boxes. If the second box is checked, the corresponding table must be completed. And so the table must include each indirect cost rate, if you have multiple, that will be used to calculate those indirect costs for the grant. Then the table must also establish the type of direct cost base that you're going to use to include or establish your indirect. So that's that modified total direct cost for those of you that would use the de minimis. You do not need to include any indirect cost rate information for subrecipients if you have subrecipients. For governmental entities, enter on separate lines each agency or department that will carry out activities under the CPF grant, and then the indirect cost rate applicable to each agency or department, including if the de minimis rate is used, and the type of direct cost base to which the rate will be applied. For nonprofit organizations that use the simplified allocation method for indirect cost, or elects to use the de minimis rate of 10% of modified total direct cost, you'll enter the applicable indirect cost rate and the type of cost rate base in the first row of the table. For nonprofit organizations that use multiple allocation-based method, enter each major function of the organization for which each rate was developed and will be used under the grant, the indirect cost rate applicable to that function, and the type of direct cost base to which the rate will be applied. And again, those the multiple that applies only to the multiple allocation based method. Next slide. Some of you may elect and may have this grant budget just simply covering all of your facility costs that are going to be excluded anyway. If you're only using this grant for example, for construction or renovation of a facility and you don't intend to have staff or other indirect costs, it may be simplest to simply mark the grantee will not use an indirect cost rate to charge its indirect cost to the grant. And that's all there is to it. Next slide. For those of you, again, that are using the de minimis, just showing you kind of more of a zoomed in screenshot, grantees should ensure that you're checking that second box. The grantees will use the indirect cost rate identified in the table below to charge its indirect cost grant. Complete row 1 in the table and check the calculation before submitting HUD. Next slide, please. If you have a rate, again, here's the screenshot specifically of Appendix 3. You should ensure as well that your checkbox 2, complete the table and attach letter from the cognizant agency with the approved rate. So these are for those organizations that already have a federally approved indirect cost allocation plan. You're going to complete box 2, fill in these rows, and attach the documentation, the letter from the federal agency that approved the rate. Next slide, please. Just a reminder, if you need a rate, negotiating an indirect cost rate with HUD is complicated and can take some time. You're likely to have to go through HHS first. There are likely few, if any, local governments for which CPF grant will move you over the $35 million threshold. So likely not really applicable or in the immediate situation. But if you are a grantee in this situation, you should notify your grant officer and get further guidance right away. Grantees cannot incur indirect cost rates without a negotiated indirect cost rate if you're one of those that requires this rate. Again, local governments with federal funds over 35 million. You cannot incur indirect cost until you have the approved rate. Next slide. Just a reminder and encourage you all to go back and read through these sections of 2 CFR 200. But here's the cost rate references. Again, allowable costs are covered in 200 subpart E, reasonable and necessary, direct or indirect, and then if you're using the indirect, the modified total direct cost utilized to establish the basis for your de minimis rate. States, local government, and Indian tribes can do their indirect cost proposals, and instructions on how to do that are included in 2 CFR 200. And then the nonprofit organizations included in 200 Appendix 4 for indirect cost identification. So again, encourage everyone to have their finance team review all of these items. Whether you're taking indirect or not, it's important to still make sure that you are establishing your proper policy procedures and protocols for documenting those direct costs. Everybody is going to have direct cost, of course. So make sure that you are documenting allowability, allocability, reasonable, and necessary. Next slide, please. Some additional resources here are links. Again, all of you will be provided with the copy of this presentation so you can access. The 2 CFR 200 references, we encourage you, if you look at the first hyperlink on the screen here, if you're out there Googling 2 CFR 200, there's going to be multiple websites that might offer citations. Really want to make sure you're using the electronic CFR, Code of Federal Registration Regulations. So use that first link, the www.ecfr.gov. Want to make sure you're always using that as your go-to for reference on federal guidelines. CPF supplemental information, as a reminder, showed you a screenshot a little earlier in the presentation about where you can find a little quick guide for indirect spending. That's back on the HUD exchange. Of course, reference always back for each of our 22 and 23 cohorts. Want to really encourage everyone to continue to reference the grant guide and your grantee award package completion checklist. Links are there as well, but you can find all of that on your HUD exchange, and hopefully you've already downloaded and have access to that on your desktop. Next slide, please. So this concludes our presentation. I would like to, again, thank our host and all of you for patience with our technical difficulties as we got started. Reminder that all of this material will be sent to you. You'll be notified in email when the slides, the transcript, and supporting material are posted to the HUD Exchange. Reminder just one more time of the HUD Exchange particular CPF website page, ask a question resources. If you are not confident or sure who your CPF grant officer is, here's a link there that you can identify your HUD staff or grant officer assigned to each grantee. And one last reminder before we log off, please, if you have not done so, register with HUD Exchange, create an account, and establish your listserv specifically for CPF. With that, I will conclude today's presentation. Thank you again for your attendance and your patience with our technical difficulties. Have a great day.
That concludes our conference. Thank you for using Event Services. You may now disconnect.